Right, good afternoon and welcome to this share tracking live webinar. Today we're talking about the stop loss strategy. And this is a topic that is widely discussed, and it's a really interesting topic with a lot of viewpoints. And hopefully this afternoon I can encourage you, if you're not using any form of a stop loss at this point in time, that you'll be making use of a stop. And hopefully I can show you that it's really easy to implement. So let's get right into it. What is a stop loss and why is it actually so important? Well, first of all, you need to note that the stop loss is basically the investor's safety belt. It's there to protect you against any sort of negative movement, and it's basically something that should actually be enforceable, like your safety belt that you should wear when getting into your car, but a lot of people tend not to use it. Now, the reason people feel like they don't want to use the stop loss is because they feel like the stop loss knocks them out of the market too quickly, or they get knocked out of the market when they don't want to get out of a specific share, or they get mad at themselves. Some people go through some experiences where they've applied a stop loss and then the share pulled back, it hit their stop loss, and after they sold their shares a week or so later, the shares made a new record high, whichever the case may be, and then a lot of people tend to leave out the stop. But I can tell you now that out of experience, we found that a stop loss is one of the key things that every investor should have in his or her inventory. It's something that they should be using, making sure that they do protect themselves, because the markets is a little bit on the unpredictable side, and there are market swings or mood swings in the market, and things like that can catch you off guard if you're not ready for it. And what we tend to find is the reason why we encourage people to use their stops is because if you're a newcomer in the market, you will get so emotionally involved in the markets that you'll tend to buy the share at the wrong time, or not just you will buy the share at the wrong time, you'll totally buy the wrong stock. And these things all play a major factor, and you want to protect yourself as far as possible. Now, in our lecture modules, I want to encourage you to go to our lecture modules and read up on our stop loss strategy, but I'm going to touch on everything that is said in that lecture module as well. But I would encourage each and every one of you to please do make the time and take the time and the effort and go and read up on those lecture modules of the stop loss to get a little bit of a better understanding of it. But in that we say that you should be implementing a stop loss of no more than 15%, right? And that's including your brokerage. Now remember, when we talk about brokerage, you need to bear in mind that that's that 3%, plus minus 3%, 3.5% that you're paying for the buying and the selling of your transaction. Now that's really important because you need to take that into consideration when deciding what stop to use, right? Now, if you're using a stop loss and you're including your stop, you actually want to add it visually on your chart. Now you'll see the chart that I have for you this afternoon that I have open is FirstRand, and I want to use it, and I've got another two shares that I actually want to touch on. You'll see that just in July we saw that FirstRand broke through the 200-day again, and it's now on the upward. It rallied all the way up here to this previous high that you can see over here, which was at about 57.26, and you'll see the previous high is sitting at about 58 Rand flat. So it still hasn't broke that all-time high, but in this current cycle, this is the highest point at about 57 Rand 26. Now, a lot of people did place trades when the market did break above the 200-day moving average. A lot of people bought in this little dip over here. We see about 10.6 million shares traded exchanged hands, and we'll see that at that price people paid about 50 Rand. Now, how does the stop loss work, and how do you implement it if you did buy in that position? Well, first of all, the reason why we encourage you to add a stop loss visually to your chart is so that you're constantly reminded of where your stop is at on your platform. Now, before I get into the example of how this works and how you can implement your stop, you need to ask yourself the question this afternoon, do I want to apply a stop loss or don't I want to apply a stop loss? And if I'm going to apply a stop loss, what size should my stop loss be? because obviously every share has its own stop. You can't put a 12% stop loss on every stock because you think that they have the same amount of volatility or the same amount of movement, because that's not so. Every share has its own unique movement pattern, and every share has its own unique volatility that you can go and look at. Now, yesterday we did spoke about the beta value. You can go and look at the beta value to try and see what the volatility is of a stock, and you can go and find that under the studies tab. You'll see the studies tab, and you can just go and search for the beta and add it onto your chart to see what is the beta value of a specific stock. But I don't want to get into that. I actually want to get into the example. But before I get there, I actually want to show you, if you go back to your subscribers area, on the subscribers area section, and you go to subscribers and you go to the filter section, you'll see that there's an option which is called the stop loss value. The stop loss value section. If you click on it, it's going to open this filter for you, and this filter contains almost all the shares, not all of them, but most of them. And you'll see there in this selection, it basically shows you the code of the company, the name of the company, the sector group of the company, but then the subsector group of that main sector that it trades in. Then you'll also see it shows you the average rand movement, the positive movement, and the average rand movement negative, and then also the average positive upwards movement percentage-wise, and also the average percentage downwards movement. And then right at the end, you'll see minimum stop loss. Now, this is the minimum stop that you should be using, excluding brokerage. This is just based on the historical data. Now, for those of you wondering, this is about 3 years worth of data. So in the past 3 years, we get what is the average amount of rand movement and the average percentage move of a specific share, and then also the minimum stop that you should be using, right? Now, as I said, this is a minimum stop, and you can use anything less than this if you want to, although from what we see in history, it would not be wise to do that, right? So the minimum stop you'll see here is some of the shares would be about 6%, then some of the shares would be about 7%, depending on the sort of movement that's occurring within that particular stock. Now, we are currently looking at FirstRand, so if I go and search for FirstRand here, this will give me some sort of an indication of what FirstRand does. Well, FirstRand, obviously I can see moves about 80 cents per day on average positive. While on the negative or on the downside, the share will normally do about 69 cents on the downside if the share is in a negative trend. So it will fall per day about 69 cents. But if the share is in an upwards movement, it can do about approximately 80 cents movement per day. Then on the other side of things, it will show you that the average percentage move that FirstRand does is approximately 1.38%. So it does about 1.38% positive movement if it's on a positive day, and about 1.41% if the share starts moving down. Now remember that the average percentage move of a specific share like FirstRand is quite volatile, because FirstRand has a beta value of approximately 1.4, which means that it is more on the volatile side of things, so it moves quite rapidly if you compare it to the financial sector. But you'll see that the minimum stop that you should be using is about 6. Now, this is a nice handy tool that you can use. Once again, you can go and find that. If you go to the subscribers area, to the filter, you'll see the stop loss value filter. You can just go to that and just go and have a look at the average movement that a particular stock does, and also the minimum stop that you might want to use. Right, so I hope that helps you. Then another thing as well, not only do you have the nice charting tool, or a really good charting tool that you can use to add visually stops to your chart so that you know where the share is relative to your stop. But remember, you also have your SMS alerts that you can set up, your SMS notifications. You can go and set up your SMS notifications by entering the code of the company or the name of the company and setting up that SMS to receive a notification of the movement of your stock. Right, now all the formalities aside, let's get into the fun practical side of adding the lines and calculating your stops on your chart. Now, as I said, we're going to start off with FirstRand, and we're going to buy, let's say we bought FirstRand on the 18th of July. Now, if you've bought the share on the 18th of July and you kept the share up until this highest point, that was about 15%, right, that it grew in the past 27 days. So in the past 27 days, this share moved approximately 15% upwards. Now, it did have some small pullbacks, and all of these things play an important role because nothing moves in a straight line. But that's why you can't have a small stop. A lot of the time, people tell me they want to buy, let's say, for instance, for argument's sake, the FirstRand stock, but they want to add a 3% stop. Now, my question to you is, if you're going to add a 3% stop loss on FirstRand, is that including or excluding brokerage? If you tell me that's excluding brokerage and you add brokerage on top of that, then it means that your actual stop is in a region of approximately 6 to 7%. But if you're just adding a stop loss at 3%, you're not leaving any sort of room for your share to breathe, because the first moment that share starts to pull back, right, and just moves approximately 0.5% or 1%, you're out of it. You're going to need to sell that share because it's going to hit your stop loss. Remember that when you're trading on your real life portfolios, that you need to take into consideration your brokerage fees that you're paying, that's ranging anything between about 3 to about 4.5%, depending through which brokerage firm you're working. Now, on this example, we bought the share on the 18th of July, right? So on the 18th of July, the share was bought, and the closing price there was about 50 Rand. Now, that's important because if we open up our calculator, right, so let me just get my calculator up here running. Right, so we bought the share for 50, right, for 50 Rand. And obviously, let's say we're going to, for argument's sake, use a 10% stop. If I'm using a 10% stop, that's including brokerage, and my brokerage is approximately 3.5, depending through which broker I'm working. Now, if I deduct that 10% from the 50, it means that my stop is about 5 Rand. So that means that if the share price moves back down to about 45 Rand per share, I'm out of it, right? I'm going to sell it. So how do you add it visually to your chart? Well, first of all, we bought it on the 18th. Now I want to add a horizontal line. So you go to your select tool section, which is located to the far left-hand side of your charting tool. If you go there, you'll see you've got your horizontal line. There's a bunch of different tools that you can use, but I'm going to use a horizontal line. Now, the reason I don't use a segment line, but a horizontal line, is because the horizontal line draws a line right through the chart. So as the chart progresses over the next few months or the year, whichever the case may be, I will always have a reference point on my chart because this draws a line right through my whole chart. But if you use the segment line, it only draws a segment, and you're going to constantly need to adjust that segment line. So I would much rather prefer the horizontal line, and I'm going to use a red line, and I'm going to make it a little bit thicker. And then I'm going to put my stop loss value at about 45. Now you'll see there on my x-axis, on the x-axis you get your, you've got your prices. Sorry, my apologies. On the y-axis, you have your prices, while the data is on your x-axis, and you can just move all the way down to about 45. Let's just get down to 45 or close to it as possible. Right, let's just see if I can get to about 40. That's it. That's fine. Right, so there I've got my red line, my red horizontal line at about 45. Now what you can do is, if you don't remember, and you need to make your stop loss levels as the distinct color that you can associate with your stop loss. It might be red, it might be yellow, but choose a horizontal line or a color that is different from all the other lines that you already have on your chart. If you're a technical analysis guy, so you would probably have a bunch of lines already on your chart. So you want to have something that's different from all of those other lines. So I would tend to opt for a red line. But if you're going to get confused with your red moving average line, you might want to change it to a yellow or a blue, or whichever the case may be. I would not use a green, because normally you would use a green horizontal line to indicate where you start making money from the share, so your take profit region. So then you know, for instance, if the share does move above this value, you start making money from that stock. Now, what you can do is you can go back to your selection tool, which is located to the far left-hand side, open up your selection tool, and then you can simply just click on your annotation, which is found to the right-hand side corner of things, of the select tool. You click on annotation, and just make sure that you do change the color back to black. I'm going to make it bold, and I'm going to make it 14 text size, and I'm going to put it here, and I'm going to say 10% stop loss, right? And I'm going to save that. Let me just move that up a little bit. This line back to about 45. Right. So there I can clearly now, I've made a note for myself on my chart that is my 10% stop loss level. And should the share start to pull back, I've bought it over here on the 18th of July, but should the share decide, listen, it doesn't have enough steam within it, and it wants to start to pull back, so I bought it over here, but if the shares decides to pull back all the way down towards my stop loss level, I'm going to get out of it. But that in fact did not happen, because the share actually started to move up. It did start to go up again. So what do I need to do in regards to my stop loss? Now, something that we do mention in our chart, in our charting lecture and within the stop loss lecture, we say that the stop loss that we use is called a trailing stop. Now, what does a trailing stop loss mean? Now, a trailing stop loss means you need to move the stop loss up. It can never go down. So the thing about a stop loss is it can only move up. It can never move down. A lot of people think that because the share price has now moved from the stop level, so it moves from the stop level to this level over here, I need to adjust my 10% stop loss downwards. That you should never do. Remember, you're using a trailing stop. A stop loss can only move up. It can never move down. Now, we bought the share for 55 or for 50, right? And that was on the 18th of July. Now the share went up and it made this new high within this particular cycle. It went and made a high over here, and that price was about 52.14. Now what do? You open up your calculator again, you put in 52.14, you deduct your 10% stop from that 52.14, which means that your stop that you can take is about 5 Rand 21, if you want to round that down. That means that your new stop loss level needs to be in the region of about 46.92 or 46.93 if you want to round that down. So what I'm going to do is, on the new software, you don't need to draw new lines. You can actually just simply click on the horizontal line and move it all the way up to about 46.92. All right. So I'm going to move that, and I'm going to put my stop loss over there. So now the share went from the position where we bought it over here to this point over here, and I've now adjusted my stop loss. But now the share continues to move up, and it starts to make a new high over here. And on the 8th of August, First Rand went up again, and it made this little high over here, and that was at about 54.80. So once again, what do? I open up my charting tool, and this is going to take you about 15 seconds maximum every day to readjust your stop loss. And what you're going to do is you're going to use the new value, which is that 54.80. You deduct the 10% stop that we said that we're going to use, and that means that my new stop loss level is in the region of about 49.32. But now let's say the share went up and it made this little high over here, and that is at a price of about 57.26. So what I'm going to do is I'm going to clear everything, and I'm going to put in this price of 57.26, deduct my 10% stop from it. Then it means that my new stop loss level is in the region of 51.53. So what do? You move up your stop to 51.53, right? And you put your annotation next to your stop loss horizontal line. Now you can clearly see here that from where the share made this little high and where it pulled back all the way to this point over here, you can clearly note that this never at any point in time came close to my stop loss that I set of 10%. So this means that I'm still keeping the share. I'm not gonna leave or I'm not gonna sell the stock just yet, because my stop loss is still in place. My 10% is still in place. The share price never came close to my 10% stop loss or even touched this level. Now, as I said, this sounds like a lot of work where you need to add it visually to your chart every day and readjusting it. Remember, if you're making notes, never move the stop loss down. It can only go up. It can never but never go down. So every day you're going to spend approximately 10 seconds per share to readjust the stop loss level. About 10 seconds, 10 to 15 seconds. That's how long it's going to take you to readjust it. But at least you have that visual point of reference, how far the share price is actually from your physical stop loss. Because now you can clearly see here from where the share prices are at today to where my stop loss is. It's quite far away. So I'm still happy. I'm still in the stock. I'm still in the money. I'm not going to sell it out. And remember, we said that at this maximum point up here, which was last week Friday, the share was at about 15%, which means that you're already in the profit in the region of approximately plus minus 10% or a little bit more than that. You're already in the profit. So it's clearly wise to go and add your stop loss visually on your chart so that you know how far your share prices are away. Another example that I have for you is Vukele property, and you'll see we've got Vukele here. They're trading at about 18 Rand 76 per share. Now, for those of you who are who like to do technical analysis, you would have already spotted the underlying trend. You'll see that there is an underlying trend within Vukele. And what's quite interesting is a lot of people would tend to buy the share right now because the share is bouncing off from, well, hopefully would bounce off from this underlying support level. You can see it's a very good 45-degree upward strong bullish trend, right? Share prices bouncing off this level once, twice, and it's now the third time that it's touching this level. So a lot of buyers out there is looking at this technically and saying, listen, is it now the right time to get into the stock? And this is why it's so important to use the stop loss, because if you decided that today you wanted to buy this share, what you can do is you can go back to your subscriber, look at the filter, the stop loss filter, and go and put in Vukele and see what is the minimum stop. So the minimum stop which is required is about 6%. So let's say we're going to use it 10% again, or if you're feeling a little bit conservative and you're feeling afraid, you're going to use a 6% stop, which is the minimum. So if you bought the share at 1876, because that's what it's trading at this point in time, you can clearly see it's bouncing. Oh, it's touching this. It's not bouncing, my apologies. It's touching this underlying support level. If you decide you want to buy it, you can then implement your 6% stop loss if you want to be conservative. Now, this is why it's so great to use it, because now you can say the share is trading for 1876. You can deduct that 6% stop, which means that your stop loss level is at 1763, which is all the way down here, right? So you can clearly see that the stop loss is all the way down, and it has to travel quite far. But from a technical perspective, this share just seems to keep going up, and a lot of technical buyers are looking at this position currently and saying, listen, is the share going to bounce off this underlying support level that's going up here, this upward trend? Is it going to bounce off it? I'm going to take the risk, I'm going to buy the share, but I'm going to implement my stop. And this is why it's so important to implement the stop, because if you made the wrong decision, you still have a stop loss in place to protect you, and from which you can get out if you decided to technically sell the share, right? And this is one of the examples that I wanted to use this afternoon, because I know a lot of technical traders are acting on this underlying support within Vukele, on this underlying upward support, and they might be buying it, but it's important that you do implement your stop loss on this. And you can clearly see that it's going to help you and protect you. Now, I hope you had a better understanding this afternoon of how you can actually implement your stop loss levels visually on your chart to make your life a little bit easier. Remember, with the stop loss, it's there to protect you. Think of it like your own personal safety belt in the stock market. But you want to apply it visually to your chart. I know a lot of you are busy and you don't have a lot of time, but it's going to take you approximately 10 to 15 seconds per day to add your news to adjust your stop loss level upwards. Remember, you want to add it visually. Remember to change the color of the line. The horizontal line needs to be a different color to the colors that you normally use. Use a distinctive color that you know or can associate with a stop loss level. Add your annotation. That's the second thing. Add an annotation so that you know what percentage stop loss you added onto your chart. Remember, on FirstRand, we used a 10% annotation. We said 10% stop loss. So now I know this red line represents the 10% stop. On other shares, you might use a 12% or a 15% stop, whichever the case may be. But remember to add your annotation. So there are two main things. You should use a different color, which is distinctive, and you should be adding an annotation to remind yourself what percentage stop loss you are using on your chart. The third thing, and this is the thing that I want to end off with, you need to ensure that you adjust your stop losses every day if possible, otherwise once a week. Otherwise, if you don't like adjusting it every day, you can adjust it every time the share makes a new high since the day you've bought it. So if the share has a new high since the day you bought it, adjust your stop loss from that new high since the day you've bought the share. Remember, a stop loss can only go up. It can never, but never go down. So I hope you've enjoyed this session. I hope you have a better understanding of this. Should you have any questions, please do phone us on 012-940-0800. Just that number again, 012-940-0800. From my side, Corné, thank you very much for joining us this afternoon. Remember to join us for tomorrow's market analysis, the market overview, where we're looking into the markets and what's been happening. Thank you very much for joining us. Enjoy the rest of your day. Bye-bye.